Investors and traders, welcome to the channel Market Chart Pattern. Today is 30th of July 2023 and I hope everyone is having a great weekend. In this video, we are going to take a look at the key US tech stocks that we always do for this video segment. And this video is for educational purposes only and it is not a financial advice. So in this video, we are going to take a look by starting with Google. So the parent company of Google is Alphabet, and we are looking at the long-term chart of Alphabet, which had a name change sometime in the 2010s. And this is the monthly long-term chart. Google is a very interesting one. We had not been looking at it in our analysis that we do on a weekly basis, but going forward, we are including this stock. Now, one of the things about Google is that if we compare it to Apple or Microsoft, for example, it hasn't moved in terms of price as much, but now the patterns are telling us that Google is poised to move, and the expected move is more to the upside. Now, just by looking at this really long-term monthly chart, I have done a retracement, and what we have seen in the recent months is that November 1st or the November of 2022, that's last year, Google actually retraced about 50% of its move higher. That's how long the data goes here on TradingView. So it's done a 50% retracement, and we are about to close the month of July, and it has taken the highs out of the month of June, and looks like it is set to close with a strong close for the month of July. Now, moving back to the smaller, well, not a smaller time frame, but the weekly time frame, smaller compared to the monthly time frame. Really interesting thing is that we have seen this 50% retracement and also a 61.8% retracement coming from the 2020 lows, which are the COVID lows, to the all-time highs reached in November of 2021. So this marks a very important low because as long as this low stays in, there is a chance that Google might in fact be going for a one-to-one projection higher, so an ABCD move to the upside, which could see these highs of about $150 per share level in fact being taken out. Now let's move to the daily time frame, and in the daily time frame around this mark of around $88 to about $85, the stock has gone through a period of accumulation, in my opinion, and also we had a nice one-to-one ABCD formation right here. This is our 61.8% Fibonacci retracement, and the stock was moving in a nice channel formation like this, and it broke out of it, then it retraced and tested the upper boundaries, and now it's going to go and test the 78.6% Fibonacci retracement. Here it could find some resistance, and there's a possibility it just pulls back somewhat, maybe down to a retracement of 38.2% Fibonacci retracement, maybe come down and test the upper boundary of this channel again. And it's also possible that the momentum could be so strong that it just pierces through the 78.6% Fibonacci retracement and goes and challenge the all-time highs. But the Google stock seems to be looking pretty good in my opinion. Let's move to Tesla. It's one of our favorite stocks that we cover here extensively. In fact, you can go and check our previous videos. This low of 105, which we forecasted weeks in advance, and so far that low has held. Then we were looking for $210 per share level around here, a key resistance level, and the stock took quite a while to break out of it, and when it did, I believe in the early part of June it was, we informed you guys, and we have seen a nice rally to the upside. And now what has happened is we'll just move to the weekly chart here. It's a little bit more clear. We have a few targets for this stock, and one of the targets was first of all, it was $270 per share level. Second one to about $300 per share level. Roughly speaking, we have a confluence of two Fibonacci ratios and expansion coming in here, and then finally we also have about $350, but roughly speaking anywhere between 340 to about $348 per share level. And what we have seen is after the price reached our second price target around $300 per share, we have seen a negative weekly candle. And the past week, the price action has been more positive, and we have a positive or a white candle close, which is a bullish candle, but again the week before a pretty bearish candle formation. And we just moved to the shorter term daily chart, and here this is what we're looking at in terms of a pullback or a correction that takes place. The previous corrections have been of this much and this much magnitude, and what we have seen is this one so far looks like could perhaps reach to this $242 per share level, $243 per share level. That's the 38.2% Fibonacci retracement, but we have a confluence level coming in around $225, $230. That's the key one we should be watching for if there in fact is going to be a deeper pullback in this market. And we also have this nice trend line rising, which also coincides here. So a number of things coming together, a confluence level setting up. This is what we'll be watching for. Let's go and take a look at Apple. So Apple is a stock that long-term investors should already be holding. It's just met all our targets. We were positive on the stock right here when there was a lot of negativity, at least in the YouTube sphere, about the Apple stock. We were turning bullish. We were you can watch previous videos, and we were saying there's a key pattern formation coming close by or even reaching here, and we turned bullish. All our targets were met and exceeded, and now the stock is just slowly creeping higher, and of course there's a possibility just $200 per share level. The psychological mark is nearby. Maybe it's just gonna go and attempt that. Okay, so let's take a look at Microsoft really quickly. Microsoft, unlike Apple, has maybe there is some selling coming in here. We were watching for these price levels here, which we have marked. These are based on the previous correction in this move higher, and it has completed one of them at $328 per share level. There is a possibility maybe it goes and tests the $322 or $320 per share level. After that, it gets a little bit more interesting because we have the 38.2% Fibonacci retracement coming in at around $310 per share level. Below that, we'll have to watch for the stock for its price action, but this is what we're expecting. Maybe this move lower could in fact take the stock down to about $310 per share level. That's also possible because that's a 38.2% Fibonacci retracement of its move higher. Let's take a look at Meta. So Meta has had a tier to the upside, a really nice price action. We became bullish after the price closed above in convincing manner, about $200 per share level. We were watching for the $270 per share level. That is the 61.9% Fibonacci retracement, and we also had a 1-to-1 ABCD projection going to about $283 per share level. But the stock has been pretty strong, very strong in fact, and it has exceeded all those levels. Now maybe the stock goes through some consolidation because look, it's been a pretty strong move higher. Maybe there is some profit taking. We're also reaching into summer months, so we'll just keep on watching this. Netflix, that's the next stock we're going to take a look at. So you see this shaded pattern formation. You go and watch our old videos. We were in fact looking for this stock to go and reach about $390 per share level, and the high has been $490 per share level, and the high has been $485 per share. So close enough. We miss it by about $5. But look at the value of the stock, $485 stock, and now what it is doing is it has retraced right down to about 38.2% retracement of this move higher. This is the CD leg, and it is an interesting situation. We are watching this level carefully, but we also have another market symmetry level around here, which is this much, and there's a possibility that the stock in fact could move a little bit lower, maybe come into around $370 per share level. That is to be seen as well. Now we will take a look at RBLX. So the RBLX is really moving sideways, and as long as this C point around $33 is intact, we think that the move is to the upside because of the stock moving in ABCD or 1-to-1 projection higher. So anywhere between $56 to $60 per share level remains our target, as long as this $33 per share level is held. Let's take a look at Shopify. So this Shopify stock is moving in a really nice channel formation, and every time it reaches this top of the channel, we see some sort of pullback that comes into this stock, and we have seen it here, we have seen it here, we have seen it here, and we have seen it again here. So the possibility remains that, you know, there's a chance it could go and test its lower channel as well, but you know, the momentum remains strong for this stock. The price is hovering around 20-day moving average. The 20-day moving average is above 200-day moving average, which is gray line, and look at between the gap between these two. That is, you know, an indication of a stronger momentum. So we'll just keep on watching, but the stock looks pretty good. Looks like the e-commerce space is coming back in fashion again. Has never been out of fashion, but because of the inflation pressure, there might have been you know, some pressure on consumer spending. With the inflation easing, maybe those pressures could get elevated to some extent, and we have seen a nice rally in the stock from 13th of October 2022, and it keeps on, you know, giving us a really nice move higher. So guys, this is what we are watching for in these key US tech stocks. I don't think I missed any of the stocks that we normally take a look at, and we will keep you updated with the as the price action unfolds over the next week or so. Thank you very much. Good luck and good trading.